Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Wednesday, the 24th day of June, 2015, and this is the daily report for gold and silver. Mixed bag in the precious metals markets this morning, with gold trading off a little bit, silver actually trading up a little bit, also platinum trading a little bit higher. Want to take a look at platinum over these next couple of weeks, but first to gold, off about $3 on the day, 73.70. Now the low has been 68.10 and a high of 79.70, so not very much of a range today. Silver is trading higher this morning, as I said, going against the grain, if we want to call gold the grain. 1584, trying to really claw its way up back to $16 an ounce. Ineffective today. High 88.5 and the low 72. So we are trading near the highs, as I said, up about 10 cents. More on silver in a little bit. So traders, as we have said over the last couple of weeks, we expect there to be some real pressure in the gold market. Now, we were saying gold and silver, and it's interesting that we do see a division over the last, call it about a week, between gold and silver, with silver actually having more strength. And so we're really seeing a change in that gold-silver spread. Specifically about silver, what I find noteworthy in the marketplace are these lows that we've been hitting recently and the potential low that we're going to have. Now, if you notice, this is back in the beginning of May when we originally hit this low right here being roughly at just below, call it 1170. So let's draw a line straight across. We can also see that mid-June, we had this market actually breach that low, and that's when we hit these marks at around 1160. We've seen lows recently touching that point. So the question is, are we getting into a scenario in which the market's actually beginning to get oversold and see it begin to pop back up? In terms of our very, very short-term wave count, the way that we're looking at it is that we have probably just completed and these are minor counts, of course, but a minor third. Following this minor third, we are at this point looking for gold to move up. We are looking for an uptick in gold, and based upon Elliott Wave studies, we figure this uptick could take us as high as about 1190. Now, that would be a minor fourth wave. Following this third, that would be the one thing that we would look for right before we would get that final fifth wave down. And traders, I really believe that that fifth wave down through necessity is going to take us below, call it 1160 on the charts. So traders, as we step away from that really short-term picture, I want to start moving out in time to give us a better sense or feel for where we're sitting in the market relative to where it's been. Half a day chart, Japanese average format. And we also have our MACD on the bottom. I'll touch on that in a second. Let's go ahead and blow this up. But there's absolutely no doubt when we look at it through the eyes of this chart, you cannot say anything except that we are still absolutely 100% range bound. Now, according to our studies, not only in Elliott Wave, MACD, along with fib retracement, are all alluding to the fact that we should see some sort of a potential bottom in the market. But realize, traders, that bottom in the market that we're looking at right now is coming in right around here, which absolutely matches these recent lows, and these recent lows have been prevalent over the last 2 months, 2.5 months. When you consider the fact that the market was trading up around $1,300 back in February, came down and made this low at 1140, that's a tremendous move. Your halfway point, of course, and this is where our fib retracement comes in, has served to be extremely tough resistance. It can't break through this point here. It's attempted on multiple occasions here. It came a little short here. Here it exceeded it by a little bit, that false, almost a false positive. And here it moves down yet another line. But there's nothing apparent except for the fact that traders, this market has been caught within a range. So for us to say that it's going to find a bottom here and begin to move up, you know what? That's not rocket science. You can see it easily on a chart. The question that I have is that, well, how high is it going to go if it does begin to move back up? And I can tell you from history right now, we've got some real resistance right here at 1200. And then, of course, we've got this 50% retracement. These are the tops that we were saying back when the market first came down that it had to breach this point for us to get bullish again. We've not gotten bullish again, and this is basically the reason why, is that the market did not have the ability really to break above this technical point. And so our key levels of resistance are 1223 and 1200. I am looking for the market to pop back up, and if it does, we'll have a nice little buy in there. It'll be a short-term trade, but I'm not looking at picking up the farm, so to speak, on this trade, because I think that we'll then, as I said, return into one final fifth wave down, and that fifth wave down is really where we can go either test these lows again or even test this low at 1140. So traders, what about silver? As I said, I have noticed a distinct difference in silver in that they're not always moving exactly in tandem. When they are moving in tandem, of course, typically what you see is silver leading the way in terms of percentage gains, but also leading the way in terms of percentage drawdowns when the market trades lower, as we saw yesterday. It had a tremendous sell-off in the metals, but the big sell-off that you had really was in silver. Now, we're looking at a daily chart. On this daily chart, no doubt we've got our current channel lines, and that's telling us that our short-term direction in the market is absolutely down. We've seen that in the MACD as these averages move down, but if you notice, it almost looks like they are crossing. Now, remember, we talked about that false positive where you'll get a cross, but it is immediately kind of negated, and you'll get a false positive, for example, here where it looks like it's going to go into the other moving average, but then kind of moves out. In this case, we've gotten our cross, and now what we really want to see is this market going to start moving apart? In other words, what you look for in an MACD, convergence divergence, is whether they're coming closer together or farther apart, because that's really telling you, giving you some trend strength information. So what am I looking for? Well, in essence, in silver, it does appear as though we might have, again, this is a minor count, but completed this third minor, and now we're going into a fourth, which is going to take us up, according to our system, anywhere between, call it 1637 and about 1650 on the high side, before having one final fifth wave down. And as I said, I'm on record of saying that we're probably going to test anywhere between 1505, 1510, 1525. Those are the lows that I would look for. And I think we'll see a little uptick before we have that one final washout or wave down. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.